Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Tuesday, May the 25th. The year is 2021. Let's talk trading. Trading without emotion, part 2. And today's video is for educational purposes only. Your results may differ from mine. I got some feedback. I guess there's a couple traders out there that can relate to what I was saying about trading without emotion. Um, and the thing about it is that it's so hard for some traders to just do what's there. In fact, I just got off the phone with a trader, and I'm going to have to bust him. He was wanting to do the wall mall method, and he's wanting to add all these different things to the chart. And I just said, learn the wall mall method, leave it alone, trade it as is. And that's just part of that trading without emotion. It's like you get this feeling that maybe I can do this or maybe I can do that and add this and add that, and it's like no, the real key to brilliance is to make things simple, take stuff away that's not necessary. It's like you don't need a bunch of stuff. In fact, he was asking about the 3 level ZZ and wanting to change it, and I said, look, when I trade the wall mall, it's like I don't even have a 3LZZ on this chart. Don't really need it. I mean, yeah, I have it on this chart, so but I don't have wall mall lines on this chart. This is a different setup. This is a DSR trade with the higher lows and lower highs set in, and it also has a bunch of imbalance showing. But wall mall, it's real simple and straightforward. You got your long trigger line, you got your short trigger line, and he was saying something about, well, that you need to know when to enter and exit. It's like, well, we already know exactly where to exit. And he was saying, but yeah, sometimes though, you say you might take the first touch and Walmart takes the second touch. And as I explained to him, I go, if you look left, what's happened here? You see how many times prices crossed above this line. So on this one, would I take that first touch? It's like, yeah, you take that first touch. But every time you're trading, it's like you place your bet. So it's like, do I know price is going to go up? No. Do I know price is going to go down? No. It's speculation. So at this line, I place my bet. It's like, do I know if the ball's going to land on 36 red on the roulette wheel? No. But if I want to place that bet, I place the bet. Either I win or I lose. And so it's the same thing with this trading. Rather than fret and get all emotional over, if I place the bet here, am I going to win or lose? And then you live and die by every ticker, every candle. It's like, no. If you place your bet here, maybe you put your stop loss, below the low of that candle, or maybe below the low of this candle. Or maybe you place it all the way down here. You give it room to oscillate or to breathe or to pull back. But there's no reason to fret over it. And then it's like on the upside, hey, we get into money management. If you were here, you're up 2.8 pips, So the question is, hey, it just went through. What did it do? We talk about price action. So here it made a higher high, it came down, and it closed just about a little bit below or above the previous high. And then what happened? It's not making a new high. It's coming through the candle body. It's exiting the wick zone of this candle. Well, why not take that trade? You could do that. And you could bag your, 3 pips. Hey, that's a good trade. As Walmart would say, he's pretty much a third of the way. Or you could have let it ride and say, you know what? Maybe I move it to break even plus 1. Because I think it did hit 45. So trading the Walmart, at 5, you move your stop up maybe to break even plus 1 and see what happens. But as you're looking at it, it's like, hey, you know what? It broke that low once and pulled back up. If it breaks it again, which way do you think it's going to go? Up or down? You don't know, but Either if you think it's going to go down, then you exit. If you think it's going to go up, then you stick. But if your stop loss is here, there's nothing to worry about. You've already protected yourself from a loss, unless price just blasts right through your stop. But, for the most part, it probably won't, but it could. So that's part of getting the emotion out. Now, look here. We're right around that weekly open, within 1.2 pips, 1.1 pip, which is the same as the daily open from yesterday. We're right near the pivot point. So we're near a lot of critical areas. So it could go through or retrace. But as far as having emotion, there's no reason to, if you're here and it goes here, there's no reason to get mad and yell at the screen because you had opportunities to exit. I mean, yeah, I admit sometimes I'll yell at the screen, call them names, It's like, dang it, but I just usually laugh it off. And I laugh at myself for yelling at the screen because that's just stupid. You got to be like Mickey Rourke in 9.5 Weeks, that scene where um, Kim Basinger walks in to give him a hot dog, and he's just sitting there steering, in his three-piece suit, just looking at the screen. He's all calm, cool, and collected. He could be down $1 million, but you'd never know because he's just sitting there watching, just waiting. And so look what happened here. I mean, price went up. So if you had exited here, you might be upset, but why? That was your choice. But now you're up, 4.6 pips if you got in at 40. Real simple stuff. Why make it complicated? Don't need any more indicators. You really don't. People go, what's this line? Well, that's just what I call my price meter. So looking at this line, this is the H1 open. So is price up or down from the H1 open? That's just a quick visual. Notice, I don't even have the big, any of this stuff here. I don't even have any multimeters. This is just real simple, PA simple. Now, on my other version of PA simple, I did kind of muck it up a bit. I added a bunch of different indicators, but here I've got how many candles in a row, and the close minus open on each time frame, close minus the highest low to see if there's any of those trades, lowest high minus close to see if there's any of that trade. Is it in a imbalance zone? I've got that there, and then the 3-level ZZ. So we had one on top on the 1 and the 5, then on the M15, a 2's on top, and on M30 and H1, you got a 1 on top, this candle. And then here, one or more bars ago, there was a H4 on the bottom. Look at that thing, just rocketed up past the 50. And see, kind of kicking myself because I know what happens when price gets in the 40 when it comes up. This is the launch pad. You hear me talk about it all the time. Should have been in that trade because it just launched. So right there from the 40, it'd be worth 13 pips. And that's just what price does sometimes. And it blasted through that area I had pointed out earlier. So you can see how it just blasted right through some of those. They're not here, but we still have the weekly pivot, but we don't have the weekly open or last anymore. So it just shows you how just one simple horizontal line trade can pay off. And if you think about it, every time you place a trade, if you really think, I'm betting. Okay, I know you're trading, but if you think, I'm betting, I'm either going to win this bet or I'm going to lose this bet. And you set up your rules around that bet where I'm only going to let it get to so long and then I'm going to exit out because that's what my risk tells me to do. And then you know what? If I can get, so many pips, maybe, if I'm lucky enough to get 10 pips, maybe I'll put my TP right here and take the quick 10. Because I know if Walmart was trading this, if this was his first trade and it got up to here, he'd be out. He'd be done for the day in that account and switching accounts. And that's just how you have to do it. And, oh, by the way, Walmart's on vacation. That's why he's not on the phone with me this week. I won't let him. I said, you got to be on vacation. But he's trading because we were on the phone at like 4 o'clock and my time, 7 o'clock his time. He's an addict. He can't stay away. So, Walmart, if you're listening, I'm ratting you out. And, oh, also on the, let's see, there was a question. Oh, somebody was asking about futures, if I ever traded futures. Yeah, I traded futures, like I said, one time at the very first pirate gathering when everybody came to Tucson to visit me. Michal Kreslik was here, and Airball was there, and a few others. And one guy wanted me to show, I think we were doing dynamic support resistance trading. And so he said to trade futures. So he's like, here's my account, live account. It's like, ooh. So I go, first I got to look at it. And it's like, okay, how do I buy? How do I sell? Okay. And so then it was like, click, click. I think we made $100 and, in one trade, and that paid for lunch for everybody, or part of lunch. I don't remember all the details, but it was cool. It was fun. Um, but no, I don't trade that per se. And I think there's somebody else was asking a question about something, but now I can't remember. Maybe I have to get to it the next video. But we can kind of go through some of the charts here. Monthly, nice range on the month. You can see that broke out that previous month's high. On the weekly, we've been cutting across that weekly open. We're up 8 pips above it right now. You can see just 2 pairs haven't filled the gap. And you can see we broke through the previous day's high. Nice move up, but then a move down. So that opening range was broken. Yearly, up 510 pips. Inside bar, we broke through that inside bar at 41.91. And Walmart bust me. I've been saying every time prices gotten over 142, I say, no, I should go short. And last night before I went to bed, I saw where price was. I go, oh, I should put a short in. I go, nah, better not, because it could run up to 143. But as you can see, a 142 short. When I woke up, it was down around, I think it was down around 60 this morning. It's like, man, that could have been a nice 40 pip trade or more had I held it. But it's, somebody says Harry hindsight, but when you look here at this 142 level, you can see there's no closes above it. What's that tell you? Once again, just looking at the charts, it's pretty easy. You can see here, look at these wick zones. What happened? Price hasn't closed above there. 141.86 level. So, these simple little horizontal lines you put on the charts, you don't need oscillators. In fact, I was talking about the crypto. I talked to that one guy's son. He said they're using stochastic RSI and some moving averages. It's like, okay. Because they were talking about divergence. Okay, the pivot point that was missed yesterday got taken out. Today's pivot point got taken out. Green rats are feasting. And I'm kicking myself because I got out of a trade right around here. Okay, once again, we've taken out those pivots. We had that missed pivot from yesterday, once again, taken out. So we've got one missed pivot. No, one missed pivot. Okay, in and out of the lower wick zone, just touched the upper wick zone and got rejected in the moment. Once again, just showing all the imbalances that were put in. Back to the simple price action. And right now, see, this isn't an hour that we would normally trade, the Walmart method, but it paid off. Meaning it pays off about half the time, meaning high minus low is greater than 13, but it's not something that we would live for or look for. And it looks like we're coming out of that, the highest low just popped back up. Okay, fellow traders, that's it. Just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.